Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Royalty Pharma PLC quarterly report. Royalty Pharma PLC offers a range of businesses and services to the biopharmaceutical industry. These include buying biopharmaceutical royalties, funding innovation in the biopharmaceutical sector, portfolio management for marketed therapies, 35, and development stage product candidates, 14, investment opportunities across various therapeutic areas, including plus rare disease, plus cancer, plus neuroscience, plus infectious disease, plus hematology, plus diabetes. The significant increase in Royalty Pharma PLC's stock price can be attributed to a series of strategic moves, strong financial performance, and positive market sentiment. Key events include the acquisition of an external manager and a $3 billion share repurchase program, strong Q4 2024 financial results, and optimistic 2025 guidance. Additionally, significant funding agreements with Revolution Medicines and acquisitions of royalty interests in Amgen's Imdeltra and Alnylam's AMVUTTRA have contributed to the stock price appreciation. Positive analyst coverage from institutions such as Goldman Sachs has also boosted investor confidence. These collective events have driven a 56% increase in Royalty Pharma PLC's stock price over the last year, with a 61.5% year-to-date return. The primary drivers of revenue growth or decline for a biopharmaceutical company are multifaceted. On one hand, revenue growth is driven by ongoing investments in new royalties, supplementing growth within existing portfolios, and offsetting declines from products that have lost market exclusivity. Additionally, upfront payments, milestone payments, and royalty income from development stage product candidates contribute to revenue growth. On the other hand, revenue decline factors include royalties on products that have lost market exclusivity, as well as fluctuations in interest rates, foreign currency exchange rates, and geopolitical events. Regulatory exclusivity and patent protection also play a crucial role, with loss or reduction of patent protection leading to revenue decline. Furthermore, intellectual property claims, taxation and withholding taxes, artificial intelligence, cybersecurity, and accounting standards can all impact revenue growth or decline. Ultimately, the biopharmaceutical industry is subject to various risks and uncertainties that can impact revenue growth or decline, including clinical trial failures, regulatory approvals for development stage product candidates, market acceptance, government regulations, patent protection, supply chain disruptions, and delays in clinical trials. Net income and profit margins changes. An overview: the net income and profit margins of Royalty Pharma PLC have undergone significant changes over the past year. In the 3 months ended September 30, 2025, net income decreased by $362,147 compared to $806,358 in 2024, resulting in a net income of $444,211. This decrease is attributed to various factors, including losses on equity securities and a decline in income from financial royalty assets. For the 9 months ended September 30, 2025, net income decreased by $28,183, 2.8%, compared to $996,462 in 2024, resulting in a net income of $968,279. The decrease is largely due to non-controlling interests and fluctuations in non-cash charges associated with financial royalty assets. Profit margins have also seen changes, with operating income decreasing by $307,918 in the 3 months ended September 30, 2025, but increasing by $240,206 for the 9 months ended. Net income attributable to Royalty Pharma PLC decreased by $255,770 in the 3 months and $94,027, 26%, for the 9 months. The reasons behind these changes are multifaceted, including losses on equity securities, a decline in legacy, SLP interest and Avilion entities value, and fluctuations in non-cash charges associated with financial royalty assets. The maturity of old RPI assets and potential exchanges for Class A ordinary shares have also contributed to the changes in net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. For the years 2025 and 2024, the operating cash flow has been consistently positive, demonstrating the company's efficiency in managing its resources and generating revenue. This trend suggests that the company is financially stable and capable of sustaining its growth. The company's debt level has experienced significant changes over the past year. Long-term debt increased by $1.951 billion, while total debt carrying value rose to $8.945 billion. The note's fair value also saw a substantial increase of $1.3 billion from December 31, 2024 to September 30, 2025. Furthermore, the debt level surged by $1.4 billion, reaching $9.2 billion. In terms of interest expenses, there has been a notable rise. Interest expense increased significantly from $66,506 in 2024 to $79,564 in 2025. Additionally, interest paid net saw a substantial increase of plus 95% and plus 99% in 3 months and 9 months of 2025, respectively. The changes in debt level and interest expenses are closely linked. The issuance of new senior unsecured notes with an effective interest rate of 5.61% is expected to boost interest expenses. However, the decrease in interest rates on term loan and the increase in borrowing capacity under revolving credit facility may have mitigated some of this impact. The company is projecting a growth-oriented strategy that involves investing in innovative projects through co-funding clinical development. They also intend to expand their market reach through strategic acquisitions of biopharmaceutical companies and securities. To achieve this, they will require significant cash inflows, which may be challenging due to various factors beyond their control. The company is taking steps to mitigate risks by diversifying its operations, maintaining effective internal controls, and exploring tax-efficient structures. Additionally, they have authorized a $3 billion share repurchase program to boost shareholder value. Overall, the company's outlook is focused on strategic growth, risk management, and long-term sustainability. Acquisitions and divestitures overview. The company has made significant acquisitions to expand its portfolio, including Trodelvy, Nurtec ODT, litifilimab with Biogen, and various other assets. Notable deals include the purchase of Alnylam's Amvuttra from Blackstone for $310 million, a synthetic royalty on opilimab from Zenas BioPharma worth up to $225 million in milestones, and royalties on biopharmaceutical products. In addition, the company has acquired interests in various entities, such as Avilion Entities, Royalty Pharma Investments ICAV, and Legacy SLP Interest. It has also entered funding arrangements with Biogen for litifilimab and CK-586. On the divestiture side, the company has sold assets including employee EPAs through internalization and MorphoSys development funding bonds in January 2025. Company's shareholder returns. Our analysis reveals that the company has taken steps to reward its shareholders through 2 key initiatives. Firstly, it has a history of paying dividends, as mentioned on pages 18 and 64 of our reports. This demonstrates the company's commitment to sharing its profits with its investors. Secondly, the company has also engaged in share buybacks, as noted on pages 12, 17, and 64. By repurchasing shares, the company is effectively returning value to its shareholders while also reducing the number of outstanding shares. This strategy can help boost earnings per share and increase investor confidence. There are currently no significant concerns regarding inventory buildup in the provided financial summary. However, potential risks exist for supply chain disruption due to external factors such as travel restrictions and manufacturing site closures. That concludes the financial summary for Royalty Pharma PLC. Feel free to comment below, and I will be happy to answer them when possible.